Hello and welcome to Real Day Trading. So, real quick, the 5K count, we're around 4K. If Tesla pops tomorrow, we are going to be in great shape, like well over 5,000 great shape. But we're going to get to that. What I really want to talk about is how to draw these algo lines, because my hope was, silly me, hope on this, but I would introduce and say, here's a new method, and I am working on building the method. When it's done, I will report the results. We'll take a look at it. It'll be analyzed, but you can follow along as I'm doing it and try to figure it out yourself. How am I putting in these lines? Look at them, analyze them, study them, all of that. What happened was everybody decided I'm going to draw my own algo lines and trade off of it. And then I'm going to ask 15,000 questions, arbitrary number, obviously hyperbolic, about every single chart I draw. Is this one right? Are these right? And by the way, most no. And then, well, if they're not right, well, they're obviously subjective because, if I keep getting it wrong, well, then it just has to be a subjective process. So, there's something wrong with it. So I decided, okay, I'm going to try, God help us all, to not write out, but draw out here in this video how to do these algo lines. So let's get started. Go here to a single chart, a single daily chart here. Let's start with a popular stock today, Qualcomm. Okay, you can see lines are already drawn on Qualcomm. So let's get rid of them. Okay, we're gonna get rid of the lines. You can later on pause your video here and compare. I just got rid of the lines. I'm going to redraw them from scratch. We'll do this several times and you can compare and see, do they match what they originally were? The memory's good, not that good. All right. So first you'll notice I have white and yellow candles here. White and yellow candles are candles of above average volume. The yellow candles are down days, the white candles are up days. This is just to make it easier for me to identify which candles I can start with on the algo lines. Okay? So, off the bat, we're going to start, let's see, down here, and we're going to draw a line. It connects to here, 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 all the way up to here. Now, one thing we're going to do is, if the line gets breached, which here it does, see this, it gets breached right there. This got breached to the downside, we're going to make it red. If it gets breached to the upside, it'll be green. If it doesn't get breached, it'll be white. And a breached line that breaches both up and down on the same candle will make blue. You'll see what I mean. But this one here, clearly, here you had support for Qualcomm going all the way up, and then it broke below it right here. Okay? Now, we're going to take this line here, and we'll draw this one down. Connects to here, connects to there, and there we go. Breached here. Make it red. That. Now, you do not want the slope of your lines to be too steep. So we'll get into that as well. Here's another one. I'm going to draw this one down, right down to there. And you see here, it also meets here and breaches again. Same candle breaches this one to the downside. So now you have two breaches in one candle. And you have a cross right there. That cross. So when you have that, right there, there's a cross, you want to note where it crossed. That looks like around 147, let's call it 147.50, somewhere around there. Let's put it there. Okay, let's cross at 147.50. Okay. Here we have one. We're going to bring it up. It's connecting. Now, this is unbreached, so it's just going to keep going. Right there. We're going to draw one here. This one goes down, keeps going. And then this was acting as support and it got breached to the upside. So we'll make this candle green. And we have another cross here, right there, around 160. There we go. We have a cross right there, and it is at roughly 160.13. Right there. And then finally, we have one here, which is acting as some support, but today it dropped below it. So it was breached to the downside. Look at this here, 147.50. This candle here goes down to 147.29, 147.59. Then over here, you see finally, and over here, by the way, 147.29. Right across. You can almost draw that line right across there. And then finally, see that? Yesterday, it fell below that price point. And what happened today? All the way down. So that price point was breached. If you had an alert on that price point right there, and an alert went off to the downside, and you shorted Qualcomm when you got that alert, this is where you would have wound up today, up $8. Can't get any more delivered on a silver platter, any platter. There's another one here, 160.13. If you put an alert there, and at some point in the future, Qualcomm breaches 160.13, well, now you can go long. That kind of makes sense? Okay, but there are a lot of particulars here. So let's go to another one, and let's do, I don't know, let's do one that doesn't have much of a history. Let's do coin. I've done coin, but you know what? Once again, we will take away the drawings for coin. There we go. Okay. So I want to start up here, and I'm going to, because this one here is a very clear line. Look at this. It's going straight down, and it's all these touch points. Now, occasionally, you are going to get a candle that has, like, I don't know, like this. And sometimes these candles are bad prints. It's hard to tell. I get it. But you have to be careful with saying that that violated an algo line when you have a candle with like a really long wick. That's clearly a bad print. But let's just go here. This one looks like a doji, so but I was just trying to make an example there. And keep going here, and then you see here we are clearly, this was acting as resistance all the way through, and then finally, all the way down here, it broke through. So let's make this line green. There we go. We can shorten the line like that. Okay. Now we want to go. By the way, I want to make another example here. Let's say you're starting here, right? And you go, oh, I want to connect it to up here, like that. Oh, there's an algo line. You can't just pretend like these candles don't exist. The natural connection is here, like that. That is the natural connection for this. There, and you can see it's breached to the upside. Make that green. There we go. But you can't go, oh, I'm going to do that and pretend that doesn't happen. You got to go to the next wick that doesn't cause an extreme slope. So in other words, it's not here, right? And you're not going like all the way like this here. I mean, you can on occasion do this type of, but really you want somewhere around here. And so that would be the line, right? And that would be the violation of it. If you had if you drew that and had an alert to the upside and it went up here and you went long here, you would have done really, really well. Okay, so this is an earnings candle. So I want to go right around here and I'm going to jump up and go here. And this one here has not yet been. And so when it has not yet been violated or breached, you just draw the line up to the recent day. So that's where that would go. Here it looks like a horizontal one because you got a lot of touches there going across. And looks like it comes to right there. But then it kind of, it's an interesting one right there because you could see right to there, there to there to there. It's kind of violated here, kind of breached, but not really. So this is unclear, this line. It could keep going. You could jump it like that a little bit, but then, so that's the other thing. If you jump this and go, all right, I'm just going to go here, you can't just ignore this candle. This candle happened. So we're just going to put it here, and the line stops there. Wasn't really breached, but it doesn't really continue either. So let's see if we can find another one off this candle here. There, perfect, perfect. There, there. And this one here is going to go and then be breached to the upside right there. And let's see here. We have, just to give it a lower bound, we have that there. Go to the current day's candle. Right there. There we go. Okay. So here you have coin. Here you have a cross and you have another cross, right? This cross here lives right at around 206, right there. Where does it look like there's resistance? This 206, this cross, it seems this horizontal here, this line that didn't continue. So because we have a cross though, these crosses do not disappear. They do not, once they're established, they are maintained even if the lines, like this line here, was breached to the upside and it helped form this cross. This price point remains as a point of resistance until that is broken through. So this is 206. We're just going to put here 206 as a point of resistance. Down here, we have another line at around 187, another cross, and we can see that did act as some support. And in fact, it was right up until yesterday, and then it broke it. So if you had this 187, which is above the 50 SMA, and you put an alert on 187, and it triggered to the downside of 187, and you said, all right, I'm going to short coin, and this would have been before it fell below the 50 SMA, you would have shorted coin at 187 and gotten $20 off that. Let's say you waited to 185. Let's say you double confirmed it with the 50 SMA, you still would have been getting $15, $17 on that. Okay. Let's try another one. Let's do, I don't know, how about a different sector? I've done a lot of these throughout. So MGM, here we go. Wow, that's a lot of lines there. Wow. Okay, let's see if we can match up these lines perfectly. Delete all the drawings, gone. There we go. Okay, So right off the bat, check the date. No, okay, good. Let me make sure that's on earnings on MGM. Nope. Okay, good. We're good. All right. Um, let's. Whenever you can go far out, if you can go farther out, that's the better, right? The longer the line and the more touches on the line, the stronger the line. The shorter the line, the less touches, the weaker the line. Okay. So let's start here and draw all the way across. And right here, we will see it is violated to the downside. So let's just put this here in red. By the way, we also, bring this down, on this line here, could try to draw it up to there like that, but you see there's not really any touches on this after, and you have a really short distance between this one and this one. Whereas here, you're connecting 1, 2, 3, 4 here until that. Now, you could, if you were starting on this one here, then you would draw this up like this here, and you would see clearly you have this violated to the downside right here, like that. But for this one, we're going straight across. Okay. Now, right here, date, yep, okay. We're going to go here. I'm just looking at it and I'm able to see how many touches a line would have. I mean, just out of experience. So for you or others that don't have as much experience, it may take some time to locate where the line should be. Right? This one here, I could see right away, has several touches on it, and it goes right up to here, and this one's going to be violated here. This was acting as support, 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 until bam, breaks through. Right? So here, put a red right there on it. Okay? Now let's see what we have going on up here, up top. I'll move this back because this was the violation here. Off this one, okay. We have another clear line right here, and this one here is not been violated. So this one stays white. Okay. Let's go a little bit closer to where today is. And you can see here, this one here clearly has a bunch and is acting as resistance right there. There is a unbreached algo line there. There's kind of one right here. It's not a very good one, this one. This is sort of okay. It kind of goes to here. I mean, yeah, right like that. You have 1, 2, 3, 3 touches here, and then it's acting as resistance, and then finally it breaks through. It doesn't really break through until 2 days later. It could be blue or green. I mean, it's green because it does break through here. But there it is. This one's kind of steep, but it's got a lot of touches to it. So right there, right? If it's a steep line like this, it really needs to have several candle wicks hitting it. And this one does, and you can see it's also violated to the downside right here. So there we go. And then we seem like we have some horizontal-ish right there. It's going to go right across there. And of course, once again, this has been violated to the downside. So now here you have these two algo lines, both of which have been breached, right? So they're gone. But once again, there's your price point right there, right? Kind of hits the bottom of this, the low, 4108. So if you had a alert for 4108 here, and it breached it like that, you would short and get a nice $2, $1.50 off that short, right? You would have saw that today it opened below that price point. That price point would have been established yesterday. You put it in, you put the alert in, and now today you know MGM, great short. Try one more here. Let's try maybe we have McDonald's. McDonald's is a decent one. We can do that. There it is. Kind of looks like an arrow there, but let's delete all of McDonald's. So we start from scratch. Okay. Well, I kind of remember and know that there was one that came all the way out here, right? This one here was like all the way out here like that. And that was a pretty strong one. And that would be red to breach the downside. An argument could be made here that you could come up here like this and say this breach to the downside. What I don't know yet, and this is one of the open questions I have, is if let's say this was back in, I don't know, September or whatever, and I drew this algo line off this candle, used it, found out that it was, got the alert that it was breached over here. And if you notice, that breach doesn't really do much. It just continues going. So if I shorted on this breach, it would not have even been a great short. I do have one here, actually, which then comes down. And this one here actually is move that up, a green. So I'm not sure I actually would have shorted on that breach to the downside, because I also have this line which breaches to the upside, and then I have a price point here of 29.26 and two different breaches. So it's kind of difficult to tell. These would actually kind of both be blue. They're not exactly breaches to the upside. They're not exactly breaches to the downside. They are breaches though, right? If I brought them back to here, that breached right there. If I brought this back to here, that breached right there. But if I cross them, it turns out that price point would have related to a decent long. But again, it's not very strong and it's pretty short. So we're going to go with this. But my open question is still, once I use this candle here, can I later on then start another algo line off a previously used candle? I imagine you can. If I'm programming the buy and sell, and in past September, and I'm going back, just because I use this candle back in the fall doesn't mean I can't now use it again to reestablish a new line. That is my thinking. I'm almost positive it's correct, but I don't have any absolute confirmation it's correct. So I just wanted to point that out. So this here, bring it back, that's breached down to the downside. Okay, we have it's so much easier with the white and yellow, by the way, because you can just see, sorry, vape. You can just see where the above average volume candles are. So right here, we're looking at a clear, but breach here. This is resistance. And so, like that, I'm just going to go like this here. It breached to the upside here today. Just today it did. This would actually be green. Even though I said my memory sucks, I remember I probably miscolored that before, because that would have been one that was just going in today. That would be a breach to the upside. That would be a sign, a bullish sign for McDonald's, by the way. Just putting that out there. Um, Here we have one that's going to go connect to here, connect to here. It's going to go down here, and this one is a clear breach to the upside right here. Let's just to there and connect it. Connect. I hate this way to draw. It gets drawn to the wick itself over there, but here and this one's clearly breached to the upside. And so that's green. Great. Next, let's draw one here. This is pretty good resistance though. So here's an, oh, I maybe spoke too soon on McDonald's, because this is an unbreached resistance line right here. Let's see here, do we have, nope. Here. Here's an example where we have a extended wick where I don't exactly trust that print there. So this is a clear corridor for McDonald's right there. You could have one right here, by the way, that just goes up and acted as support, but and then technically this here fell below that support, so you could technically have that line. It's a little steep, but if you wanted to have a second cross here and say 244.25 is your bottom end, you could do that. And then up here, you could say this is your upper end, which is 250.91, and today it breached 250.91. Now you do have two lines meeting here that could form really strong resistance. So even though you have this price point at 250.41, right? So you have 250.41 price point like that. You also have this, which is 253.58, 253.58, which is your algo line. And on top of all of that, you have your, what is it here? Your 100 SMA at 252.25. All right, so 252.25. What that tells you, obviously, is if McDonald's gets to 253.58, that's gone through now your price point, it's gone through the SMA, and it's gone through the algo line. That is strong enough for me. I'm going to put an alert here of 253, we'll call it 75, give it a little breathing room. Because if McDonald's crosses that, that's a pretty bullish sign. Okay, I hope this makes sense, right? You're looking for these candles, you're looking for the wicks on the candles. You can't just make up and say, you know, like Google or something here, and go out to here and say, oh, I want to connect all the way to here. No, I mean, if you have a connection here like that, that has to get drawn. You can't ignore those candles. Or if you're doing it closer, right? You can't just say, okay, I want this to go all the way to here and ignore that you have these candles here. You have to connect it to the closer wicks. They have to be connected. And because a lot of times you're going back in time, you can conveniently just skip over those candles and try to go into a different direction. Don't do that. That would be bad. And what you're looking for is, in color code, you can color code them, but what you're looking for here is, okay, the ones in white are still active, right? But these crosses, even though this, so you have here what, 2831, even though this is no longer there, 2831, and you can see, look, it does act as resistance here. 2830 is still an important price point. And you want to set your alerts off those price points. We currently have NRG, which is, I mean, this is just one of the nicer looking. Look at this. This thing here. All right, that's clear. Algo line here. Broke right through it. Broke through the 50. Broke through the 100. Broke through its algo line. Finished near high of the day. This is a strong stock. So we got a lot of call contracts on NRG. We have Microsoft, oddly enough, in both directions. And the reason why is we got a 300, 295 put debit spread. So first we had our 315 calls. Those got whacked. Okay, great. Bye-bye. Worth like 25 cents. That sucks. Bought them for like $1.25, but fine. Then I buy the 300 puts and they start getting whacked because the FOMC, which is bullshit minutes anyway, but the market pops and Microsoft starts going up. So I quickly run and protect it, right? So I sell the 295s against it. Okay, so we're going to be mitigated a little bit. But what I wanted to do, because we lost some in that, because we're capped at the $5 between them, is if Microsoft goes, it may really go. In other words, if the market starts to run, Microsoft's going to run with it. So while that will kill our put debit spread, if I added to the 315s, and those will make up for the difference of what we would lose in the put debit spread. But if it drops and we get the full value in the put debit spread, the cost of the 315s was low enough that even if those get wiped out, we would still be in profit. So the only way we wouldn't be in profit here is if Microsoft kind of just waddles around at between 298 and like 305. So going down a lot in one direction, up a lot in one direction, great. Neg definitely seems to be running. So we can take a quick look here at Neg. There we go. Yep. So Neg pops over its 50 and now pops over its algo line. And it does run up against some resistance, 922 on the 100-day moving average. But if tomorrow this volume has some continuation, it can go through. If not, then hopefully I could sell it on its second attempt to break resistance there. Walmart, we're doing great. It broke through major resistance and it just keeps going. Tesla, as you know, we have 5 contracts at the 1125 level. We are averaged down to 9. We have already made around $19 in selling against it, but the original contract cost 30. We have now averaged that down to 9, but we have 5 contracts. So what we need is for Tesla to get around to $7 to $8 a contract, and we will make a lot of money on that trade. That would mean Tesla would have to get kind of up to 1100 tomorrow, and it seems like it's doing very well in after hours. Google, we have a butterfly, and we're $40 away from it. It actually went past it too far down. Qualcomm, we are short. We looked at that. And Procter & Gamble, we continue to be short, even though it has strength, waiting for that sector rotation. So I did sell a put against the puts against it. So there we have it. And if anything I say sounded a bit confusing, I'd say watch more videos and read the damn wiki. But you will not find, other than Dave Wise's article, much about the algo stuff there until I get it perfected, and then it will be in the wiki. I hope that this has been informative. I also hope it's not an invitation to send me 1,000 charts and ask me if they're correct. And by the way, for those of you who like to troll, one day I just need to really understand it, because it's so clear that it's usually one or two. The people that troll have no idea how to trade. None. Like, it's obvious. They're throwing out terms and crap that it just can't possibly be in the mind of someone who knows how to trade. But it's like, if I went on, like, I don't know how to knit. I don't know anything about knitting. But when I go onto a knitting subreddit or a knitting YouTube video and be like, oh, this doesn't make sense. You can't do it like that. Why combine those colors? I don't know why that voice comes out. It's always the same voice, right, when someone's complaining. I mean, what kind of life does a person have to troll on a topic they don't even understand? That is a really sad, sad life. But hey, I guess, I mean, people get bored, and sure, I, it trolling is the lowest form on the internet, but some people, I guess, live for it. Anyway, I'll talk to you all tomorrow. Continue to read the damn wiki, watch more videos. Thank you, and good night.